Welcome back. Take a look at futures this morning. We are looking at a rally at the start of trading this morning. The Dow Industrials right now up better than 70. The Nasdaq is up 42. One of the reasons is interest rates are coming in and oil prices are coming in. Take a look at the price of oil this morning. Investors are cautious as markets are reacting to the war in Israel. And still, though, the price is down about 1/3%, 85.65 last trade on crude oil. Joining us right now is Andersen Capital Management's Chief Investment Officer, Peter Andersen. Peter, good to see you. Thanks very much for being here. How does this war in Israel affect your thinking in terms of investing?
Well, if I had to make decisions like the Fed is making decisions currently, it would be very difficult to play this out. I mean, we're right at the beginning of this conflict. You know, we lived through this before with other conflicts like the Ukrainian conflict, but it still is a very live, fluid situation, as you've been reporting earlier, Maria. So time is, ironically, our friend in this case. I would think by the end of this month, we would have more clarity. But as it stands right now, it's very difficult to make any logical, informed decisions other than staying the course, holding the current investments that I had prior to, say, this weekend.
I want to get your take on where you think the Fed is going to be in terms of rates, because this week we heard from a number of Fed officials. We want to look at the 10-year right now. It's pulling in, but the Fed's Logan earlier this week says this: higher yields may mean less need to raise rates. Then you've got Jefferson from the Fed saying, we'll keep in mind tightening impact of higher yields. You're seeing a number of people point to yields above 4.5% as saying maybe the market's doing the job for the Fed. Now, this morning, rates are down 10 basis points on the 10-year ahead of the September PPI, which is coming out in 2 hours' time. The producer price index is out, and we are expecting a gain month over month, 0.3%, and year over year up 1.6%. But what's your take on the Fed's next move? The meeting is October 31st and November 1st. Did the market already make the move for the Fed, or are you expecting the Fed to raise rates? The Journal's Nick Timmeros writes, higher bond yields could likely prompt the Federal Reserve to extend the pause. Peter, your thoughts?
I'm not expecting the Fed to raise rates through the end of this year, Maria, and that was music to my ears. All the signaling that the Fed officials have done recently, I think, is well overdue. I think that they are signaling very strongly, which is unusual for them, and especially singing from the same hymnal, so to speak, that they are saying we're perhaps done. And this aspect of saying higher for longer, I think that's a misnomer. What I would really say is normal for longer, because any baby boomer has had, a mortgage rate of 8% in their past life. I think we've got too short-sighted on this in terms of only looking back to 2007 and comparing mortgage rates and saying that they're awfully high now. When you look back historically, they're not very high at all.
Yeah. And, of course, in a day or so, we're going to start looking at earnings really setting the tone for markets. Adam Johnson, jump in here, because U.S. bank profits are set to be higher on interest rates. But the major banks have been crushed in the last couple of months. We're going to get J.P. Morgan, Wells Fargo, Citigroup all reporting third quarter numbers this Friday. These stocks are down big going into the reports.
Yeah, they are down big. And, it's understandable because people aren't taking out mortgages. And if you're not going out and taking out mortgages, then obviously you can't have bank earnings. But, Peter, I'm curious. I actually have been buying some Bank America because it's trading down around book value. It's a contrarian play. Are you with me on the banks? Is there a point at which you step in and buy them yourself?
I love contrarian plays, and one of the things that I'm looking closely at is certainly with rates higher, some of the banks are not going to do very well, those that have revenues that are based on investment banking activity. However, those that are based on consumer lending, when you have higher rates, the so-called net interest margin, right, the difference between lending and loaning, that you're going to have more wiggle room at a higher rate, whereas when we were down at 3%, everybody was very focused on that razor-thin margin. So I do think banks that have a large exposure to consumer lending might do very well in this environment, as opposed to those that are focused on investment banking. We've seen a couple of IPOs. Frankly, I think that they've fallen flat on their face. I'm not looking forward to the Birkenstock either. I think that might pop and then will probably recede somewhat.
Yeah.
I know investment bankers are trying to get these deals done, but it feels very, very forced to me in a very forced environment right now.
Yeah, the Birkenstock deal priced in the middle of the range. Peter, real quick, because, Adam, you mentioned housing.
Yeah.
There are top housing groups right now asking the Federal Reserve to take steps to limit the move in mortgage rates. Since we saw the 30-year go all the way up to 7.5%, there is pressure building to reduce mortgage rates by narrowing the spread between the 10-year and the 30-year mortgage. A letter from the Federal Reserve, from the Mortgage Bankers Association, the National Association of Realtors, and the National Association of Home Builders. We'll see if the Fed resumes purchases of MBS, but is there any movement, do you think, on that in terms of bringing these mortgage rates lower? That's expected to slow things down in the broader economy, Peter.
Yeah, I don't think so, Maria. You know, there are other parameters. I mean, why don't we look at the price of housing rather than how much it's going to cost to buy a house? If you have lower prices, that would certainly take care of lower monthly payments. So there are other parameters. I don't think that attempt is going to be successful.
All right, Peter, good to have your insights. We appreciate your time this morning. Thank you, sir.